Welcome back, guys, to another episode of Sunday Setups. Today, we are doing the Sunday Setups on Monday, so apologies, guys, for bringing it to you a day late. However, be that as it may, the markets are now open, which means actually it's worked in our favor because we've actually got some price action to have a look at and, of course, see how the market's been, how the markets have opened, since last night. So with that being said, we are going to go straight over to the economic calendar just to let you guys know what is in store for this week. And to be honest with you, the week is not really action-packed with a lot of economical data. There's PMI, which takes place on Tuesday, which is tomorrow. We've also got the Kiwi interest rate. But then we've also got, which is probably the biggest part of the whole week, is the GDP Q1 for the dollar. The GDP and jobless claims is going to be a big report to let us know where and how the economy is shaping up over there. So of course, you can also see at the bottom here, it says Terra USD collapses. Tether holds as stable coin suddenly becomes unstable. Now, there has been a lot of stuff happening in the crypto market as well. So we do have a podcast coming out very soon with Blockchain Sensi. These guys are some of the pioneers in the crypto space. So it will be very good for you guys to see that podcast coming out soon. But with that being said, of course, if you guys are new, if you just come across this video, welcome to the lit side, baby. You know the vibes, it's lit side. Today I got the screens off because I'm over here and I'm focusing on you guys. And although it's Monday, as you guys will know, if you're inside our community, today is usually a day we let the markets play out and then of course attack the markets from Tuesday moving forward. So if you're new to the website, if you're new to the vibes, lit side, then head over to the packages page and actually purchase our subscription for our Discord. Okay, we have got free access for the Discord, but the free access is very limited, meaning that you don't get access to the live trades that we provide, the market analysis that we provide. But there is still, of course, enough value for you guys if you are looking to see what we do, how we do it, or how it can benefit you. We do provide live stream services every Tuesday to Friday, 7 a.m. to 8:45, and then from 12:45 to 2:45. So we cover the London and the New York Open. So it's definitely worth you guys coming over, seeing what's good, seeing if you guys can get involved. So with that being said, check out the website. If you haven't already, head over to the Lit Lounge, check out our latest podcast and check out our latest social event. And just have a look, guys, have a look and see who we are, what we do and how we can, benefit you guys. And like I said, if you are already someone that's already, you've been involved in trading or you're new to us, book a free consultation. Okay, book a free consultation and we can actually have an interaction where we can actually tell you guys how we can benefit yourself. And maybe you've got a couple of years of trade experience under your belt, but you haven't quite critiqued the last final steps. Of course, we'll be there to show you how we could benefit and how we could, of course, play an impact on your trade and education. So guys, without no further ado, let's get into the charts and let's actually see what's happening this week. Now, I've actually been waiting for a pullback with the indices. Now, this is very interesting, guys, okay, because we do know that, as I've mentioned this for quite some time, JP Morgan did say that they had an estimate of 3,800. Their analysts forecasted 3,800 being the point of where the S&P would touch. This was at the start of the year in January. Now, price has come down to 3,809. For me, that is good enough. Okay, they have come down to the same target that they predicted, and now we are seeing a pullback. Now, I'm actually waiting for price to push up higher because if we can get a play into this daily candle, then who knows? Okay, who knows? We could then get a continuation to the lower room. As far as I'm concerned, we have had a lower high and a lower low, so now we are waiting for the lower high. But of course, with there being so much liquidity above, I wouldn't be surprised if we do get a massive push up, which would of course clear out all the liquidity and give us a reaction from up above for us then to push down and see a new low. But 3,800 has been reached. We have seen over a 20%. Okay, we've seen over 25% decline with the S&P. If I can just go over to this chart and show you. Now, another thing I want to show you, sorry, on the weekly time frame is S&P also, okay, they also said that they saw the S&P also said, JP Morgan also said that they saw the S&P going to 5 100,000 by the end of the year. So what I'm looking at is actually catching a buy. What I'm looking at is to see if we actually do get the rebound from here up to 5,000, because if we do, that would be a 31% jump, which would be monumental. Okay, so this is the reason why turning up to our live streams every single day, Tuesday to Friday, is going to be very, very valuable, because we're stalking this market. Whether you're here, whether there's 10 people, 100 people, or one person on the calls in the morning, we stalk the market because that is our job. We stalk the market and we wait for opportunities. And of course, let me move the camera out of the way. And of course, some opportunities have been presenting themselves. So guys, it's going to be very important throughout this next week to be on these live streams. I can't stress enough, there's going to be opportunities where it's going to be one of those things where when someone tries to explain it to you, you have to be there to witness it. Okay, you had to be there to witness it. So of course, because I'm looking at the S&P, I'm more naturally going to be looking at US 30. And we actually had an eye candle down here where we actually got a reaction from, you can see, which is, you know, it's looking a lot clearer than, it looks a lot stronger than what the S&P is looking at in terms of where we was getting a reaction from. But nonetheless, I'm expecting us to have a bullish day. Technically, we got a bullish reversal formation right here. So I'm not going to be angry if I see price taking out this high and going for the liquidity above. I'm really not. Like I said, though, because today is Monday, we're just simply waiting for today to pan out so that, of course, we can go again tomorrow. Now, when we're looking at, you know, the amount of trades we've been able to take, we took a really, really good short from up here. And as you can see, we was able to catch over 1,800 pips. To be precise, it's just over 2,000, probably 2,000 on the head. 2005 pips we was able to capitalize on this downswing move. So please, guys, understand, like, you know, we gave you another move with the S&P the week before last. It was 4,000 pips. This is when I say, are you not entertained? Okay, I don't know what more we can do. We provide you with the setups. We provide you with the analysis, with a conversation where you guys can actually, you know, tick our brains and find out why we're taking these trades. And we also show you in real life time that we're, you know, either in the trade making money, or we're in the trade and our SL is getting clapped. So yeah, guys, there's a lot of transparency over here. So we're definitely looking forward to connecting with a lot of you guys. So let's move on to the next pair. Now I'm actually going to go over gold. The reason why I'm going to go over gold is because, let me go over AUDUSD before I move on to gold. So as I said recently, guys, and for those who don't know, AU is the most correlated stock pair that there is. So usually you'll find a correlation with AU and US 30. If the Aussie is strong, there's a high probability that the stock market would be strong as well. And I had this candle here where I wanted to see a reaction, where I wanted to see price push up and play out of last week. We've finally got to this candle now. So now I'm going to be monitoring to see what price actually does inside of this candle. If we do get a push above, and of course, if we are looking to push up higher, then I would be looking at this next candle above. But we are we're actually in the phase of being able to get a lower high form, so that we can now make a lower low. But when we go into the weekly time frame, actually, I'd be more satisfied if price pushed all the way up and played out at this lit block up here. You know, the higher the pullback, okay, the better the descent will be when we actually catch the short. So we're looking at a buy to sell right now. And I'm not going to be in a rush to catch the buy because I've been grateful enough to catch the sell. So we're going to take our time, see how the markets pan out. And then, of course, tomorrow on the live stream call, we're going to evaluate the situation. Okay. The DAX is going to be something for our members on our live stream. So I'll cover that in a bit more detail tomorrow for you guys. Gold. Okay. I gave this setup out a couple of weeks ago on one of these Sunday setup calls. And I also gave it outside the Discord. I said I was waiting for price to fill this weekly imbalance. Once it fills this weekly imbalance, we was going to get a push higher. Now, I know you can see there's a lot of lines on my charts here, and to the members inside the community, y'all know what's good. Okay, y'all know what lines really mean what. And we can see we had a really, really positive reaction off of this level here. Price is pushed up. Now, not only has price pushed up, okay, what's that? Okay, what's that? What's that, a sell or something? Okay, cool, I'll leave that alone. Not only is price pushed up, but we did get a a close above this area, okay, which was really positive for us. So we've got a major pushback up, pushing back up 600 plus pips, but we can get a higher high with gold. Commodities does set to remain bullish. There's no reason for the commodities to take a dive. Of course, we have been seeing recently the commodity sector lining up with the stock market, which is, you know, usually meant to be the complete opposite. So let's see how today pans out. Right now, we are in a bearish engulfing candle. Sorry there, just need some water, need some milk. But yeah, we can see if price, we can see, well, we should wait to see if price does actually surpass this bearish candle, because at the moment, this is a bearish engulfing. So it's all about being patient, guys. You can see that I've got a level down here, which is if price does come down to 1745, stay alive, stay alive, stay alive. It's lit side. I will be buying, and I'll be holding a very big buy from there. But I've also got an area right here where I think it's not a bad shout to be buying from. So yeah, guys, we are going to be waiting to see how today pans out, because gold has been very up and down recently. So it's just about being patient. It's about having your setups, being patient. Now, technically, we've actually played into a short setup right now, but because I don't trade on a Monday, I'm not in this, okay? But technically, price could push down from here, and this would make sense. This is one of the areas that we'd actually be selling from. So we have to simply come back on Monday, on Tuesday, excuse me, and see how the markets have panned out. But ultimately, long term, I'm still bullish on gold, guys, but I do understand that we can get a continued sell-off with the commodity sector until there's an invested interest to push in price higher. I believe next week's NFP, not next week, excuse me, I believe that the next NFP of next month will also be an important one as well. I do believe the dollar now has to start fading away. It's been really strong of late. I'll just head over to the DXY. It has been really strong of late. And what we've been seeing, if I come off of the 2-hour time frame, what we've been seeing over the past day, and when it opened yesterday, but really yesterday, towards the end of last week, we started to see prices starting to fall off. Okay, we've started to see prices push down lower. At first, we wasn't sure who was going to get a close beneath this low. Now we have, well, we haven't had the close yet. I'm not going to speak before the day's actually out, but currently, right now, it does look like we are starting to get in some more sell-off pressure with the dollar. So if we're starting to get in a more weaker dollar, this can definitely give gold and the indices there's chances to start pushing up and getting higher. So it's interesting, because there was never that once upon a time the indices would do something opposite to gold. Now it seems like gold works with the indices. So it's very interesting, guys, and it's a time to be very cautious on the markets as well. So that is going to be it for me today. We are going to be back with a midweek outlook on Wednesday, which is where we'll provide you guys with more in-depth setups, maybe go over the trades that we've sent out throughout the week. So please rest assured, if you're watching this video on YouTube, don't hesitate to smash the like button if you found this valuable. Share with a friend, hit the bell for notifications so you can get updated when we do another video. And guys, thank you very much for supporting us throughout the time that we've been doing this. We aim to provide you guys with more and more and more value. We will be back with another video on the weekend. The midweek outlook is solely available to those inside the Discord. So if you're not inside the Discord, you can go there by heading over to my Instagram or litcapital_ Instagram. My Instagram is institutionalvel. And you can click the link in our bio for free access, or you can head over to our website. You can fill out a customer form, let us know you want the free access. We're happy to help you guys. So please, once again, trade safe out there, and always remember, every day is money day. Peace.